How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for December 17, 2019. Here is a snapshot of the positions held by the institutions as of that date. And so let's start by examining gold, as we always do. Okay, so what do we see here with gold? Big increase in long positions from December 10th to December 17th. Nothing that we weren't expecting, right? Because if you take a look here on the weekly chart, what do you see? A big rally up in price. So why was price rallying up? Well, increase in longs would cause it to do that. So they increased longs from 329 to 344. At the same time, they did nothing with their shorts. So shorts are still at 58,000. Now let's examine the coloration of the cells. When we look at longs, we can see that for quite some time now they've been very aggressive. Okay, since basically August. So this is quite some time that they've been very aggressive. So all throughout here they've been super aggressive with longs, and we know the reason why, right? They've been building a position from down here. Okay, so now they've been taking profits. We had highs of 370. They took profits, reducing them to 344, and now we're sitting at that 340 range. Now I want you to take a look at something else. Take a look here, and what do we see? Total size. They were very aggressive with 428. Now are down to 402. So somewhat still aggressive, but there's been a reduction. Okay, we've also seen high 300s. Those numbers reaching as well. Now we take a look at shorts, and you can see that shorts have been doing absolutely zilch all this time. Okay, look, 57s. What are we at now? 58. So they've been basically doing nothing with their shorts. Yeah, they added some. They were helping to balance price at certain stages, but the key thing here is that nothing's really shifted except for some reduction in their long positions from highs of 370 down to 344. That's the only thing that has taken place with this drop. Now, when you take a look at what's happening on the charts, you see price reacted from the monthly area of supply, which caused price to drop. We were expecting that, and now it's reacting from monthly demand, which is causing pressure to go back to the upside. So what is going to take place now? Well, at the school we've detailed what we expect to take place on the charts with students. Price is entering into a phase in here where momentum has just completely died down. We need a new force to come in, and since then that new force has been to the upside, and it was to be expected since we did have a monthly area of demand currently pushing price to the upside. So that was to be expected. What is going to take place now? Well, it's tough to say. With monthly demand, we'd expect more pressure to the upside, and so unless anything else changes, this is the expectation. There could be a dynamic shift, but at this stage it's unlikely the dynamic is going to shift. Okay, the force is to the upside, and that is what is going to be in play. So we'll see how the positions of the institutions play out in the weeks to come. Next we have oil. We've been saying in the usual report for quite some time, expect price to rally. We are in a range. Down here we were expecting price to rally up because we were in the range, and that's what took place. Price rallied up, and we are expecting over time price is going to continue much higher. And when you look at the positions, you can see there's been an increase. 577 now up to 612,000, which is a good sign for a reaccumulation of a long. And we shouldn't have anything to worry about with respect to whether or not they're too aggressive to continue price going higher, because if you take a look at the max size they've held in long positions, they were at 866,000. Okay, so still a lot of room there. Okay, now another thing is, if you take a look at the average long position right now. It's 547. We're well above that. And the average short was 127, and we're very well below that. So shorts cooled off, long starting to get aggressive. We are 89% long exposure, which is really strong. We could see it start to build momentum to the upside. US dollar, here's an interesting one. So it's December 17th, contracts were expiring, right? And that's a key piece of information to understand here. So we see this decrease in long positions from 30 to 23,000, but can we be sure that this is exactly how many positions they want long? Or were they in the middle of transitioning from one contract to the next contract, which is the reason why there's only 23,000? What we can see is that there was a big drop in price here. So that big drop in price was likely, the big spike was likely because of the adjustments to the contracts that they had. And so if we take a look at shorts, they were increased from 8 to 11,000, so that dropped. And also longs were closed off, so we don't know again if that's going to be a permanent shift. The coloration of the cells have gone from bullish to neutral because of that shift, but we'll wait to see next week's report if that is going to hold up. Looking at the charts, you see monthly supply is in play, which is going to put pressure to the downside, and that is what has been taking place here. Weekly demand zone holding, we'll see how much longer it holds. Next we got the Aussie, and again we had contracts expiring in around December 17th, and we can see a big decrease in long positions. Now this decrease actually started from the week prior. We had 57,000 contracts, and then they got reduced down to 46 with this rally here, and now another reduction to 33, so that would make some sense. Now you look at short positions, you see shorts have gone from 97 to 93 to 83 to 79, all within this rally, closing off short positions. Now we've since seen a little bit more bullish pressure, so we are expecting that, and we've been talking about this for quite some time in the Aruja report and the market outlook videos, that we are expecting a move higher, and even potentially as high as up here with the Aussie. So closing off short positions would be very good if that is what you're going to do, but we'd also like to start seeing them begin to reaccumulate a long position. Okay, but all of this reduction of a long while closing off shorts could help stabilize price at a certain level in preparation for the eventual move to the upside. So everything is looking good for a continued move to the upside. Next we got the USCAD, and so we see this big drop in price here, and as that was taking place, longs got increased and shorts closed off. Alright, so we see that since November, October, November down here, shorts have gone from 87 to 47. Big closure of short positions. But let's take a look here. I'm just very curious. Back here we have June or July, June, July. That takes us to this area here. Alright. So after this big initial fall, we had shorts at 45,000 and longs at 38,000. They were previously somewhat aggressive, 57, and now what has happened during this whole phase, okay, during this whole range bound phase, is big increase. A big increase in shorts, close them off. Increase in shorts, close them off. So you see, increase in, it's like this. Increase in shorts, close them off. Increase in shorts, close them off. And the whole time, longs have been doing absolutely zilch. So what's been happening here is shorts accumulating and then closing, accumulating and then closing. Now, very good chance that we see this take place on the charts. Very good chance. Considering what we're seeing with gold and the dollar, many other of the other pairs, very good chance we're seeing this. And we've detailed what will likely take place and how it's going to take place and the reasons why it's going to take place in the Forex Market Outlook videos and in the observation journals that we've posted within the school. So take a look there and see exactly why we are believing that this is going to happen. But everything is looking like there's a very good chance of that taking place. All we need is that trend line to break, and then away she goes. Next is a US Swiss franc. We were expecting the drop, it took place, and now demand is in play, and we see the bullish pressure. Now, as price was dropping, we see longs closing off and an increase in shorts. Alright. So we had 75% overall exposure geared to the long side, which is bullish, and now we have neutral. Okay, with that drop from longs from 75 to 64%, and an increase in shorts. Bottom line, net positions just a positive 11,000. Nothing strong here. And we continue in the range. Okay, weekly supply, weekly demand. Now it's just sitting in between. So we need some strong forces to come into play here to break it in one direction. I think there's a good chance this eventually breaks and we see price lower. Next we have the euro. This one's been an interesting one because it's been neutral for quite some time when looking at the coloration of the cells for the exposure. And again, we had contracts expiring, but this looks pretty legit. An increase slightly on longs, a decrease slightly in shorts. So not much taking place in terms of these positions. Testing the weekly descending trend line, a drop. I think there's a very good chance we see a move here, reaction, higher. And we've detailed to the community why we believe that. So take a look at the observation journals and see the details of that. Next we have the pound. Increase in longs as price was rallying up strong into supply. Increase in longs from 51 to 59,000 and decreasing shorts, which makes complete sense. Coloration of the cells, neutral, but take a look at these ones. Slightly bullish. So looking good, looking good. We're looking to take long positions on this one. Not going to explain where we're looking to enter them long or how we're going to enter them long, but we are looking to enter long on this one. Shorts until profit taking. Profit taking fueling the move to the upside, and now engaging in an aggressive long position for a move higher. That's what we're seeing, plus a lot more. So now we're looking at the US dollar Japanese yen. We see not much happening with longs, slight increase in shorts as price was rallying up. Testing this. I think we are expecting a move to the upside to take place. I think it's likely going to happen. Even though we see the dollar wanting to get weaker, I believe we're going to see this one get stronger. So watch out for that one. Okay, so and you look at the coloration here of longs, very cooled off, getting aggressive. This has just been getting less aggressive with shorts. So even the positions by the institutions are suggesting that as well. We take a look at the Kiwi, price consolidating here. Shorts have been drastically reduced all throughout here, and starting to get aggressive with long positions. And look at this switch here. Very aggressive net positions coming down here. Just a matter of time it switches to the positive. And I think there's a good chance that we're going to see that. Alright, ladies and gents, that's your CFTC report for December 17th. If you have any questions, you can reach us at www.whiteoakfx.com. Thanks, Merry Christmas, Happy New Year, and we'll talk to you soon. Bye.